Step one, wake up early, gonna rise with the sun. Step two, get some good, some food in you. Step three, think real hard about what you wanna be. Step four, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Good morning, good morning. It is FOMC day. So, welcome to Good Morning Crypto, where we're going to turn the early hours this morning into your edge in the financial world. We all know the big headline. As the title says, it's FOMC day. So, we've got some headlines to go over on that, and I'm going to get into some of the weeds on comparing the US's path to 2% and the European Union's. I do have a headline on Canada. They are the first country to reach that 2% target. Of course, it's a little easier for them given how smaller their economy is, but it is what we have all been trying to get to. So they just ended up getting there first. It looks like David is sliding in. Let me get that all pulled up. Let's see what he has to say for today. Good morning, sir.
Good morning.
I tried to hold off on going live so that we could slide in here together.
You got a little too excited.
Oh yeah.
You're excited for today.
Yeah, it's a big day.
It is a big day. We're gonna. Oh yeah, we got some. It's a big day. I took the day off.
Oh, really now? You trying to be a degen today? Is that what's going on?
Yep.
You're like, oh, there's gonna be big moves. I'm gonna catch them all. I'm gonna be at the screen like this. You're gonna be staring at it like, ooh, I got it.
I can't see you right now because you haven't shared your screen yet. So.
Oh, it's okay. You don't need all that.
I do though.
Just watch the YouTube like everyone else.
I gotta be able to see your beautiful face.
Oh yeah, it's super beautiful, huh?
Yeah.
Well,
Good morning.
I was just giving everyone the rundown for our intro. You know, FOMC day. It's gonna be a big day, and what we're gonna be talking about. So, you didn't miss much.
Excellent.
I'd
That's good to know.
I'd like to say hello to
Are
the
you wearing
chat.
a green shirt?
No, I am wearing a blue shirt with a $100 bill on it because it's money day.
And I'm wearing a green and I'm wearing a green shirt. So
Yeah, because it's money day.
I don't plan out my shirts at all.
But good morning to the chat. We've got Trade Intuition in here, Indie Rock Crypto, and Darren Does Things. So,
what up, IRC, TI Joe, and DDT? I love all these guys.
oh yeah,
Hope you all are doing well.
it looks like Tony Soprano also just showed up for the day. Trade Intuition did say that he just entered a short stop loss in place on the coin big time. It had a nice run up and now it looks like it's retracing. Let's see how it does. So I'm sure you'll have a little something to say on that in a second. Let me dive in here and get the people prepped for success before we get to that point though. I've
Go
got
on ahead.
the stock heat map pulled up. We've got Apple sitting neutral at up 2%. We've got Nvidia down 1.02. We've got Berkshire Hathaway, one of the largest money managers in the United States, sitting up 1.08. We've got Eli Lilly sitting down 1.88%. We've got United Health Services down 1.9%. Got Tesla sitting neutral up 0.48%. We've got Microsoft up 0.88%. Google's also up 0.8%. And Meta is sitting up 0.57 on the crypto side of things. We've got Bitcoin down 0.73%. You know, just a small little move down after its almost 4% gains the other day. That was a little bit more than I was thinking we were going to get to, but it's always nice to see. My bag's pumped.
Less than I thought.
So we're a very slightly differing opinions on it. We've got Ethereum down 1.79%. We've got BNB down 0.87. We've got Solana down 1.77. XRP sitting down 1.99. We've got Dogecoin down 0.57. Toncoin's down 0.36. Tron's down 0.13. And Cardano's down 0.93. So, sea of red for the morning. I wonder if that's gonna be what we see at market open. I'm thinking it might be, as FOMC data will probably have a little sell-off beforehand as people prepare for either 25 or 50. On the economic data for today, we've got US with some mortgage rates coming out. Mortgage rate 30-year. We've got mortgage applications. We've got the European Union with a speech coming out here at 7 my time, so 8 o'clock Eastern. We do have building permits coming out early this morning. That's 8:30 Eastern time. That is going to be another big mover for today. Not as big as this afternoon when we see that interest rate coming in. We do have crude oil coming out. It looks like 10:30 Eastern time. So another little mover for the day. And the big news of the day coming out 1 o'clock my time, so 2 o'clock Eastern, is going to be the Fed rate decision, the FOMC economic projections, and we do have the Fed press conference right after that coming in at 2:30. So big day.
Building permits. I don't know that these first two things are gonna have any kind of movement on the market. It might be just chilling until the FOMC today, or it might start getting crazy, erratic, and volatile before. But I don't know. I think in the past, if I go back and I look at big FOMC days, I don't think unless it was like unemployment claims or a red folder, I don't think it has much of an impact. Building permits might. I mean, it's a way to gauge the future construction activity, because obtaining a permit is among one of the first steps in constructing a new. So if that is slowed, then that shows the economy is slowing and probably 50 basis points. But either way, I think we're going to get 50. So I've changed. I think it's going to be 50, and super, super dovish language. Yeah, I really think so. I think it's going to be 50 and super dovish language. I don't care. Powell has done big moves before, and I don't know if anybody remembers. I think the very first rate hike was a 75-point rate hike.
Yes. But as with the rest of the world, we managed that very aggressively. So It
Well,
was
I think
kind of
because I think
needed.
25. I think 25 points is the market's going to be like, nah, that's BS. We know things are worse than that. And 50, they're going to be like, oh snap, it's going to be bad. But at the same, it's like damned if you do, damned if you don't.
Yep.
It's like
Either way, it's kind of screwy.
yeah, either way, it's kind of screwy, and that's why I think that it's going to be Powell's language that's going to matter the most, and he's going to have to be super dovish, I think, and I don't think he can do that with the 25 points. So I think it's going to be 50. So we shall see. I mean, that's what the betting market says. So
Yeah. Well, I don't hold a whole lot of stock in betting markets.
you
And
should.
sometimes they're good, sometimes they're bad, but sometimes people bet with their feelings, and feelings are not a good way to invest your money. So,
Feelings are the only way to invest your money.
oh
What are you
yeah,
talking about?
so I've been doing it wrong.
Yeah,
I've been doing
yeah.
it wrong, looking
You
at data and investing off of that. Dang it.
You're only supposed to FOMO. You're only supposed to FOMO at tops and sell at the bottoms when you're
Oh,
scared.
well, I'll adjust my strategy
Not
accordingly.
financial advice, but
I've got the liquidation heat map pulled up. We've got a lot of liquidity sitting above us as people thought the top was in on that move up. It is sitting up here with millions of dollars above us in the 61,477 range to the $61,800 range. So that's the heavy liquidity sitting above us for the 24 hours. We do have a small spot sitting at 59.5, and then a little lower sitting at 58.5 as well. Not as heavy, but those are the two little areas of interest. Stock market sitting neutral at 56, up 2 points from yesterday. Crypto is up 12 points. We are back in neutral at 45. I guess we'll see if we see your extreme fear. I think it's still likely, but that's just me.
yeah, it
Do
is
you,
just you. No, I'm
you
kidding.
think we're still gonna
Nah,
get there?
get where?
To extreme fear, below
Oh
10,
yes,
before we
yes,
break out of the range.
yes,
Okay, good. Well, I'm not
yes.
alone there. Do you want to give the people a quick Bitcoin rundown for the day before we hop into some heavy data?
I'll go over to my forecast. Just open up the forecast. Turn it on. Turn on the forecast. It's on. Okay. All right. Here we go. Been watching it do exactly what I was thinking it would do. The only issue is it did not reach the levels that I thought it would. So let's go ahead and get rid of this because this is useless. All right. So I was thinking last week we were going to get big short squeezes up here to the top of the range around 63. Around 63,000. Didn't get there. Came up short. Came up to 60,600. And then I was thinking consolidation, push down, and then push up. Consolidation, push down, and then push up. And then it's breakdown. Now, because of the way the price action has developed, it's still kind of iffy. It's just one of those things, man. If you ask me, could go up, could go down. Today is not a could go up, could go down day. It is a, hey, David or LBC, is Bitcoin going to go up or down today? To which I will say yes, yes. Why? Because I think it'll do both, and I think it'll be big both directions. So we'll. I think one way is going to be a fake out, and then the other way will be the correct direction. because that is how these things tend to play out. So I would just be very careful. It's going to be like a washing machine today, just a whipsaw. I think we're going to see some whipsaw price action, and it's going to be a wild and wacky ride. I might be live during it. I don't know. I haven't made a decision yet, but I will definitely be putting out anything that I'm seeing in the charts. And if I'm trading, I'll go ahead and share it too. Because yeah, for now, I just need some more price action to develop. We have a point of control down here at 57,800 ish, but let's go ahead. Now that's this whole range. I want to take in this entire range if I can, please. Let me go to a different chart. Let me go to a clean chart. I can't get rid of this one, so let me go to Binance. I need a clean chart. All right. So zoom out, 4 hour. There we go. So we have a weekly fair value gap down below us and another daily fair value gap down below that at 51.5. We'll just call it 51.5 or 41.5 rather, and then 40,300. So do have a daily fair value gap down here that I've got my eye on, and also that weekly FVG. So, and we want to be able to hold this range. We had this big explosive move. We moved how much? In 2 months, we moved nearly 100%. Yep, 90. Come on now. 91% in 2 months. Okay, so that's a massive move. So it's not too crazy for us to go 6 months of. Now, I think the quarter will close out probably negative. Let's go to the 3-month chart and let's just go ahead and check that out. So we are in the final days. We got 12 days to end the quarter. So coming down here to that weekly fair value gap to kind of help fill this 3-month fair value gap would not be surprising to me. So I'm still seeing more downside for Bitcoin, but hey, if it holds right here, you know what? Awesome, because I think we still get expansion into next quarter, and I don't know that we get down to these weekly FVGs. Now, I'm a little all over the place. I can tell. I know. So let's go ahead and turn on some Market Oracle Pro. And we can see that we are inside the quantum bands right in the middle on the daily chart. So it's kind of a pausing period. It's kind of like a sit on your hands for like if you're a spot holder, because day traders will go down to the small term time frames and try to make plays. But as far as, your spot holding, we're still kind of like in the holding, maybe DCA area, but I could see us coming down here to that 0.5, 56,200, if not lower. But if we want to be bullish, then I say we need to. The only way for me to say that we're not going to go lower is if we come up here, take out this high, and get a close above this high. A daily close above 65,165. We get a daily close above that, and it's a pretty good close, and above the 0.236 at 65.5, then I will entertain, okay, the bottom might be in. So we can come up, and then we can still come all the way down here. But I don't know that we would come all the way back down to this weekly fair value gap once we break that high. So that's going to be the high side target that we need to get above and close above in order to kind of flip or be more certain that we're going to be bullish. Now, outside of that, we're still, we're in this range between this high and this low. So it's kind of a no trade zone for like if you're scalping or not scalping rather, but swing trading. It's kind of a no trade zone. We either want to see a pullback that we think will expand, or We want to see that move up above that high and then a pullback. And yeah. So, but as far as today goes, it's just kind of let's wait. Let's wait and see some price action develop throughout the day. Let's see what the setup is prior to the FOMC, and let's get prepared before the FOMC. And then, yeah, so it's probably best to just wait for the dust to settle, wait for Powell to speak. There might be an initial reaction to the rate cut itself. And there probably will be a pretty big reaction to the rate cut itself. So just be careful. Just be careful. If you're going to trade, tight stop loss, because it's gonna be crazy. So I think today's one of those days where it's just like, all right, man, we get some crazy price action, extreme volatility, and it should be fun for us traders. So we'll just have to wait and see. I'll go ahead and throw it back to you and let me figure some other stuff out. Let's see.
All right. Well, let me get my screen pulled up. Oh, it is sharing the wrong screen. Let me get that fixed. I don't know why it's sharing my blowfin. There we go.
Not the blowfin.
Oh no. So we've got Bank of Canada welcomes 2% inflation, pivoting focus to growth. Ottawa, the Bank of Canada's #2 official, says inflation returning to 2% is welcome news, and the officials are focusing on economic growth and downside risks. Carolyn Rogers, the central bank's senior deputy governor, said Tuesday to expect some bumpiness in the inflation data and that officials are keeping a close watch on core inflation, which still remains above the 2% target. There's still a bit of work to do, Rogers said in Toronto at an event organized by Bloomberg. I mean, we got to stick the landing in reference to a soft landing, in which interest rates are high enough to maintain and achieve 2% inflation without triggering a recession. There's a lot to unpack in that if you want to compare that to the United States. They ended up cutting rates a whole lot earlier than we did. They do have a smaller economy though, so it's a little bit easier to steer these things. They ended up cutting rates for the second time. So seeing that 2% before us isn't that crazy. But they did manage to increase their housing prices. They are a little energy dependent, which is something that the United States is not. When you compare that to us and some of our costs that have caused our inflation, we've seen that grown by wages in a lot of sectors and by our pricing on CPI. So that has been something that, like Canada, we have been worried about. If you come in and compare the United States, though, to its biggest competitor in the Dixie comparison, so you have the European Union being weighted 57% to the US dollar, so the most equivalent that we can really go, and that would be their second rate cut that just happened, and they are sitting at a much lower inflation rate. So not much lower, but like 0.2%, which is significant when you're talking about inflation. We hit 2.5% on our last one in August, and they are sitting at 2.2%. They have cut rates twice, and we are about to cut rates. This is something that we have been expecting. It is still kind of uncertain because of the data, But if you come over here and look at the CPI, which is the PPI, which is going to be moving over into your consumer side of things as we go forward, it is now down to 1.7%. This is bringing down a lot of the inflationary side of things that we will end up seeing going forward, and is part of the reason that I think we might just see a 25 basis point cut, because the Fed wants to see that move over to the consumer side of things, where for the consumer, it's still sitting at 2.4%. You do have energy inflation that has also come down for the United States. It's down 4%, which is kind of crazy when you think about the highest energy costs in the US are normally during the summer period. So you normally see these increase and not decrease by a 4%. As you can see, if you come to the 5-year, you normally see these tick ups. Here's summertime, boom, a tick up. Yes, we were already higher, but that was COVID. That was all the impact of COVID. If you come back here into July of 2023, you can also see the tick up for summer and going into the winter, where you see these dips here. Energy cost slightly lower before we kick off into summer again, where we are now seeing a decrease. So if you look at certain sectors, yes, the prices are high, but the prices are high on things that the government is more okay with. Not everyone's going to go buy a new car all the time, where that's one of the things that has come down. And you've also seen the energy costs come down, which is more important to them. You can buy certain electronics for cheap, which is part of our import-export. And we've also seen our import-export do decently well, considering that we are the biggest importer across the world, which is something that the EU also kind of does, but their import-export is a little more out of balance. They are also more heavily dependent on our energy production. So we do have that above them. We are able to steer this ship a little bit better by slower rate cuts, where if you look at like 2010, from 2010 to 2015, we cut rates slow. You go back to the 90s, we cut rates slow when we were trying to achieve soft landings. So that's just kind of my thoughts on it, where yes, a 50 point is what a lot of people want, but we don't always get what we want. And when you compare this back in history, you kind of see we take things slow. I don't know if you have any thoughts on this, but
Yeah, I think you're wrong, and I think it's a disgrace. No, I'm kidding.
I'm okay with being wrong.
No. So the way I'm looking at it is kind of like, so if they do a 50 basis point cut, so what happens? Then businesses are able to start borrowing money, right? Like at a cheaper rate. So that might entice some growth, some activity that might help with the labor that is starting to slow. That might help with getting stuff starting to get built again, getting more economic expansion. But that's a slow process, and you have to balance that with inflation, right? So I don't know. I can see why it's such a tough decision for the Fed, So,
Well,
but I do see, that would also entice people. So what does that mean? That entices people to get into what? The dollar. So that means the Dixie goes up because there's demand for it. And then that demand goes away. So
Well, and see, the big risk on a 50-point cut is going to be some of the risks that we do see in Canada, where you can see a tightening off of it while things overheat, and that's going to be a big battle. Whereas, if we take it slower, we can kind of gauge. So if you go back to our inflation chart, you can kind of see it go. It goes up and then it comes back down and then it comes up and then it comes back down. Well, when you want to see a retracement on your assets, do you want to see a boom, there we are, we're at the target, or do you want to see a slow climb back down? Gives you time to get out, you know. You want to see that slow decline on inflation as well. Whereas if they cut rates to 50 and they're trying to get to a 1% target by the end of the year, and they also decide at the next one that they're going to do a 25 basis point cut, you might start to see overheating, where that's not going to benefit any of your wages. It's not going to benefit any of that, because the first thing that your producer is going to do is not going to be like, okay, we're going to go hire 5,000 new people at our job. They're going to make sure that they can have higher prices on their return before they start to see, okay, well, we can hire 5,000 new people because our demand meets that.
Mm-hmm.
And they'll keep borrowing money at lower interest rates, and it really won't be seen by the consumer. It won't be felt by the employment numbers. And that's that overheating, where now we're just ticking back up inflation, and recession is now rearing its ugly head again.
What happens with it during inflation?
What do you mean?
Asset prices go up.
Yep.
We want inflation.
I mean, it depends on where. I want to go buy my gasoline for cheaper.
I don't know about you, but it's literally like a 30-cent difference between last week and this week. Like we were sitting at 280 and we're down to like 250. I got gas for 250 yesterday.
I have to buy 91, so I'm not feeling any of that.
Mr. Premium over here.
Well, yeah, my car is supercharged, so I have to buy premium.
Why do you put yourself in these predicaments?
Because it's fun. I want to go fast.
You can't afford it though.
I mean, I can. I'm not hurting by doing it. I just want to see the prices cheaper as well.
Yeah, I hear you.
I don't know if you had a chart that you wanted to show people, but
I just got the Dixie up.
All right, let me hop over to your screen.
So the Dixie, guys, it's a basket of assets made up of the Canadian dollar, the Aussie dollar, the euro, the British pound, and the Japanese yen. So what do we want to see? So we want to see those other currencies doing well against the dollar. So that's what we can look at. So why do we want to see those other currencies doing well against the dollar? Because if the dollar goes down, risk assets are inverse correlated with the dollar. So with the Dixie, that is. So if we want our assets to go up, we need the Dixie to go down. So right now it is sitting in a holding pattern at the lows. And would kind of expect a move back up towards at least this dynamic reactor that sits at about 103.37. And so I would not be surprised to come up to the middle of this consolidation range, though, back to 103.58. We also have a fair value gap sitting right there on the daily chart. So since I am expecting some downside on risk assets and Bitcoin, then I would expect for the dollar to come up on the Dixie. But we can go ahead and we can go over and we can look at the USD CAD, which in order for so this since it's USD against the dollar or Canadian dollar, we would want to see this go down because that would mean that the dollar is going down against the Canadian dollar. You were just talking about how Canada has achieved their inflationary goals. So is the Canadian dollar going to become um, going to be worth more against the U.S. dollar? I don't know. We'll see. But it kind of looks to me like it might want to make a visit down here from where it broke out from back to these lows. And if that happens, then that means dollar goes up. Aussie dollar, it's going to be it's sitting at so since this is the Aussie dollar versus the dollar, we want this one to go up. And it does kind of look like that, we could be seeing a retrace. It is sitting at the 0.382. We've got some equal highs over here. So a push up is what we would want to see. Oh, hold on. I didn't realize it was that far off. Come on, get up here. So, okay, so we're sitting below the 382. We do have these relatively equal highs just above the 0.5 retracement of this range. So, and we have the golden pocket sitting up here as well. So, I mean, it looks like this one has more upside. That means downside for the Dixie again means upside for risk on assets. These are very long term. This is a daily chart, so just keep that in mind. We got the euro playing out almost exactly how I had drawn it up, except for it did not come down here like I thought it would. Who knows when the last time was that I looked at this thing, but let's see, pull a fib on that, sitting there, sitting in between the 0.5 and the golden pocket. Would be aiming for that 786, but this is still looking good for some upside. Again, euro versus the dollar. That means Dixie goes down if this goes up. So we want to see these currencies to just go up against the dollar, unless they are U.S. dollar versus that the currency itself, the other currency, the foreign currency. Then we want to see those go down. But let's see, we've broken some resistance here on the British pound. I believe first of all, the euro cut rates a while ago. What has happened since they cut rates? They've gone up since they cut rates. The euro's gone up. So that kind of goes more towards my theory that when the Fed cuts, the Dixie will go up, which in turn means risk on assets in general will go down. So because the more expensive and more demand there is for the dollar, that means people are being a less risk on and being more risk off, which means prices come down for assets to entice buyers to buy them. So Japanese yen, it ever since they hiked the first time, it has just been kind of crashing. Now this is against the dollar, so this is actually another way you can look at this is you can come down here to the cogwheel and you can flip invert scale, and then you can see, okay, so this has been the yen versus the dollar ever since its history. It's just kind of down and to the right, but it's kind of moving up a little bit. We can see there's clearly a ton of room to move to the upside, but we also have some big moves down here to the downside, but it is breaking and creating new highs. It just created a new high over here. So if this can continue to the upside, then let me flip this around real quick because now I'm getting a little, all right. So that would be to the downside. That would mean good for the yen. I think, yeah, good for the yen because it's the dollar versus the yen. So yeah, so that's what we're looking for on all of those things. So we want to see all these currencies go up against the Dixie and or against the dollar, and yeah, because that means that the dollar is going down. But for now, I don't know that that's going to be the case. We'll see. Everything looks like they're going to go up against the dollar, but you still have some stuff that is kind of like, we could probably still see some retracement. So it's a little iffy on that. Of course, that's kind of where we're at in the market in general. We're kind of in an uncertainty phase, and that's why it's been bearish overall. We're just waiting, man. We'll see what happens. I think the next 6 weeks might be 6 weeks to just sit out as we wait for the next Fed rate cut, as far as like your spot buying or any kind of spot moves go. But we'll see. We'll see what happens. I'm still thinking that we get the next 4 weeks. Let's see, the next 2-3 weeks is more downside, and then second or third week in October, we flip it around and start moving towards the upside, and then by next FOMC get another cut, and things just explode. So that's kind of where I'm leaning at the moment, and yeah, but that's all I got on that. Back to you, BC.
Well, you just stole a bunch of the things that I wanted to do.
Well, you could have been doing something else.
Well,
Figure it out.
I'm gonna
Or
have
give your
to
take.
now.
Give
Well,
your take.
all right. Well, I had
'Cause this is all we've got today, brother. Let's forget alts. Alts don't matter. Who cares? Today is
I
just
do.
more about
I care.
the economic. You don't care. What?
Yeah.
You care about your INJ?
Yeah, that's about it.
Is that what you got up right now?
No, I had
Okay.
the U.S. dollar versus the euro pulled up.
Okay.
As you can kind of see, as they had cut rates sooner than us, this is the U.S. dollar in comparison to the euro. So the U.S. dollar has been sliding against it, and the euro has been making some decent highs against it. If you, where is that invert? Invert, yeah. You're not at all-time highs, but you are taking out lows from back here in 2020. So it is in a nice uptrend against the dollar, which with us cutting rates, if we cut 50, you're going to see a lot of strength against other currencies against the dollar. That's just going to be something that we're going to have to keep our eye on, which is another thing with the dollar being a reserve currency that they're not going to want to mess with too much, considering that our debt is so high, and they still want people to buy that up. So a 50-point cut could really, really hurt the dollar. You do see like the Japanese yen, as they've hiked rates, boom, explosion. You have massive, massive divergences that are really pointing, as we get our rate cut today, that they won't have to hike rates again. Like I talked about yesterday, you will see a lot of money moving out from America, which means that people are buying our debt, which is what we want. But it will weaken the dollar just a little bit. You do see the CAD as well, as you talked about, kind of strengthening against the dollar. This was one of their rate cuts back here. So you kind of see the dollar has moved down against it. It is in a downtrend, which I would expect to continue. If you check out the peso, the dollar is pretty strong again. Yeah, it's pretty strong against the peso. Well, kind of, but the pesos is just weak in general. I did have the Chinese yuan pulled up.
Didn't OC guys say that like they just like woke up one day and like printed like twice the supply of the pesos or
Yeah.
something, and
So
it
like
just cut their value in half in like a day. Like,
so basically what they were trying to do though was introduce a new currency to the system. So there was
that's right.
the
That's
old
right.
peso, and if you don't devalue the old peso, then there's no incentive to switch over to the new peso. So you
Mm.
have to destroy your dollar, which is, I don't know if you believe the conspiracy theories, but it is something I'm a little worried about. As you
What
see,
is the conspiracy?
the World Economic Forum. I
Oh,
don't know how much you play into that, but globalism is something I'm very worried about. As we,
I love globalism.
yeah, it's just,
Mutually assured destruction will helps keep people from killing each other. So I like it.
yeah, but it also makes it a lot less competitive. It also brings about more control. And I'm not about control, I'm about freedom, baby. This is America.
Uh, Sir, this is a Wendy's.
Oh my, oh my God. I haven't heard that one said in forever.
Oh, this is America. Sir, this is a Wendy's. All right, I've got Bitcoin pulled back up
All right, let me swap over to your screen.
because this is interesting. Um, all right, so I've got the quantum reactor and the dynamic reactor both up here on the screen. Chart Prime, shout out to Chart Prime. Um, is it 45% off with the discount code? I think so. Link in the description. Anyway, so we are sitting there at the uh which one is this? Hold on. All right, so we're sitting at the dynamic reactor on the daily chart. We are below it. Our quantum reactor has also turned red, which is typically pretty bearish. So, but what I can see us doing right here is a big push up, probably today. This is what I'm talking about with that whipsaw action. But it just creates a big wick. And I don't know that we can get a close back above that dynamic reactor. But if we do, we've seen closes above the dynamic reactor before, and then just a big push down. We can see all the volume over here. We do have this little what I call a divot in here, so that could be where we see price come up to, but ultimately roll over to the downside. We do have this spike here in our volume back here at the golden pocket of this entire move here. So that would be this whole range right here, going back down to the golden pocket. That's at about 50,000 to 52,000 dollars right there at the golden pocket. So that would be our last stand of support. If we were to break through that and then back test it, that's I would say, all right, time to go super short because we're probably going to come down here to this POC. But the first step would be to come to that first level, as Alex O'Crypto calls it, of the shelf, and that sits at about 44.2. Now, I have been calling for 45K for quite some time. I think for the past month now, I've been calling for 45K, and I still think there's a good chance that we get there. This is not the end by any means. This is not the end of the bull run. It just means we've got some stuff that we got to work on the macroeconomic side of things. But once we can get this whole thing back and get a nice back test of this range over here that we broke out of, I would that's what I would think that we're coming back down to test. We did get a little taparoo right here, and we did get my technical double bottom on the daily, but we can still see more downside because honestly, I would want to see a little bit more of this daily wick getting filled. So in order for me to think that this is really healthy. And we could just see all the volume above us, and we've got the dynamic and quantum reactors above us. It's kind of tricky. The one thing that I see that's kind of bullish is that we do have a W pattern forming in here. And but I think what I would really want to see, that I think is probably super bullish, probably my ultra bullish scenario, is that this turns into a triple bottom. Let me get rid of some of the spaghetti in here. This turns into a triple bottom, and then we head to the upside. So that's because this kind of just shows, all right, we've got a lot of accumulation coming on in here, but we can see that our lows have gone from creating lower lows to creating higher lows, and that would be the switch in the trend that we are wanting to see on a more macro scale. So we can kind of see how it just kind of goes down and then rolls back to the upside. So um, all of this consolidation, 6-month consolidation, it's going to lead to a big move one way or the other. So just be ready. Just be ready for anything and everything. But in order for me to flip super bullish, we need to get above these dynamic reactors and convincingly above them, above these reactors and above these high volume nodes. So yeah, I still see more downside. We can see we peak way more on this volume than we do up here. So there's obviously some liquidity down here that the market maker might want to get to before we can send it back to the upside at a nice crazy V bottom recovery. So just but if again, we can still just put in that triple bottom and continue up, but still at that point we're waiting to cross the reactors and then getting above those and getting going. So if we don't do that and we fail, I would be shorting at these reactors. I will be shorting at these reactors. So just in case, and with a tight stop loss, and then we'll see how it goes. We'll play it out. But yeah, that's it. That's all I got on the BC. Lower time frame. What are we looking at here? Maybe it's not all I got. Let's see.
I was gonna pull up the liquidation heat map real quick to show on a higher time frame while you get that pulled up on that level you were talking about. Let me show that real quick. We've got $1 billion of liquidity sitting below us, starting at 48 and going all the way down. You've got 45.7 as another hot spot with 500 million. Below that, we've got 44.665 with another $500,000 of liquidity, and the really hot zone at 43 with another $534 million worth of liquidity. So worst case
Billions
scenario.
of dollars.
Yeah, worst case scenario, the market maker might want to take up that almost 2 billion sitting below us.
Indeed. Cool.
I'm back to
I'm
your
good.
chart.
It's 6:30, so.
Oh, okay. I did not even realize that. We've just been on a tear.
I'm helping you out.
Yeah. I do have to head out the door here in a few minutes. But
Yep.
thank you
So
to
yeah, guys.
everyone that
Go
showed
ahead.
up. Thank you on this very important market day for showing up early in the morning to our tomfoolery.
Yeah, thank you guys for joining. Just if you're new to all of this, just know that even if we do go down lower, it's not the end of the world. Everything's fine. It's going to be okay. If you do plan on trading today, just be safe. Understand the risk involved. Do not put any more money into a trade than you can afford to lose. Not are willing to lose, can afford to lose. If it's between your rent and Bitcoin, pay your rent first. Okay, pay your rent first.
No, I'm
Um,
not gonna do that.
well, don't listen to him. Listen to me. This is financial. No, it's not. It's not financial advice. Yeah, just be careful out there today, guys. If you're uncertain about any kind of levels or any kind of moves as we get closer to the meeting, just if you're uncertain at all, just don't take a trade because it should be pretty whipsaw, big up and down moves. So just manage your risk properly and don't get too crazy with it. Don't add to a losing trade, especially on days when there's a lot of whipsaw price action, because that thing can start a collapsing or a cascading effect where it just starts cascading one way or the other, and you just get absolutely wrecked. So just be careful. And yeah, that's the main takeaway for today. Is just be safe. I would recommend waiting for the dust to settle, waiting for Powell to speak, and waiting for about 30 minutes after that, once he's done, and just seeing how the market has reacted before trying to make any kind of moves. So, yeah. But other than that, I hope you all have an amazing, beautiful, wonderful day, and I'll see you all in the chats.
Most definitely. Make sure to tune in to Piper Academy later today at 9:30. We will have the morning market open report with Piper and OC Guy. Maybe TradeFly makes a special appearance on the FOMC day. Who knows? We'll just have to wait and see. We do have the crypto nightcap as well at 8:30 Eastern time. So tune into that one as well. We will probably get some nice wrap down of the day and the FOMC data. So make sure to tune in. Check out those links in the description. Hit the like and subscribe button if you are not subscribed. And have a great day. Everyone wake up.
Today's going to be a good day.
Most definitely. Peace.